Hello, Strato.
Hello?
As if you have started, yeah?
Yes, we are started now, but you can wait like 2 minutes
Okay.
to have like 5 members. Daniel,
Yes, Strato.
so dushobora gutangira.
Oh, there is no one.
So there are 6 attendees by now.
But I'm not, for me, okay, we are not seeing
There
them.
is one photo for panelists and for attending.
Okay.
So good afternoon, everyone. My name is Nyirinde Kwestirato. I'm principal examiner of ICPAD and the moderator for this evening session. So due to COVID-19 pandemic, physical classes become not possible to meet physically for coaching. So in that regard, ICPAD, in a partner with experienced tutors, arrange some revision classes for some problematic papers. So in that way, we called Dr. Daniel, who is experienced lecturer, have more experience in these papers. So it is not a coaching or tuition as the way it is, but it is like providing exam tips, how to plan for exam and how manage time during exam. So Daniel, your
Yes, please.
floor is yours.
Hello.
Hello?
Good evening, everyone. So I'm happy to be with you in this uh, training, I can say, or coaching. Not specifically that we are going to split the atom for the word taxation, but we are going to provide an insight of what some of the key areas that you should know as far as taxation, advanced taxation is concerned, which can help you to be able to pass this paper. So to begin with, so let's look at some of the passing techniques that you should put in mind in your preparation. One of the main problems, or some of from experience, why many students fails is improper management of time. You find that you are supposed to do 4 questions, you end up doing 2 or 3. So if you skip a question, or if you fail to finish questions, automatically you are reducing your marks and you are reducing your chances of passing. So in this, when you are attempting questions, please ensure that you manage your time very well. I can give you a brief guideline on how to manage your time. We know that in advanced tax, you are supposed to attempt 4 questions. Question 1 is compulsory, which is 40 marks, and then you are supposed to answer other 3 questions. So when you are calculating your marks, because question 1, it takes 40% of the marks. The maximum you should spend on question 1, it should be 1 hour and a half. That is the maximum time that you should spend on question 1. So you should time yourself. If 1 hour and a half elapses, you stop where you are, attempt another question. The issue is not maximizing marks on one question. The issue is maximizing marks on different questions. So even if you get, even if you get 30 on question 1, and then you don't do other questions, automatically you are going to fail. So please calculate your time very well. Question 1, 1 hour and a half. Other questions, they should take 2 hours. The other 3 remaining questions, meaning each question is going to take 40 minutes. So don't exceed the time you have calculated on a question. If the time ends, stop where you are, then go to another question. And another important thing, when you are attempting question, please easy marks first. Easy marks first. Don't start with hard parts of the question when they are simple parts of the question. You are going to waste time on the hard part, and when time you reach, you go to the simple part. Simple parts, time has already ended. So when you are attempting, please ensure you start with the simple parts of the question. Then you can go to the hard part if you have got enough time to exhaust it. Then another important technique you should always consider is showing the workings. Don't develop answers from the heaven or from the calculator and put it there. Please ensure that you show the necessary workings on your answer booklet. Another important part as far as taxation is concerned is application of relevant law. When it comes to advanced tax, you should know how to apply that particular law practically in practice. If it is VAT, you should know the practical part of VAT. If it is their own direct tax, you should know the practical part on direct tax. How is it applicable in practice? Because at this point of advanced tax, we are looking at someone who is going to practice what he has studied. It is different from the first foundation. When it comes to advanced, you must ensure that you know how you can be able to apply that particular tax law. Another important thing that I want us to talk about is don't waste time on a question you don't know. If you read a question and you don't understand, then look for the parts of the questions that you can attempt. Because most of the times we waste a lot of time on the question that we cannot handle. By the time you reach on the part that you can handle, time has already gone. And then you say, I left simple question and I attempted hard questions. Please Always put this in mind. Managing your time, starting with easy marks. Don't start with hard marks. We have seen people passing reporting without even touching a calculator because they select the question very well and they attempt questions that they can be able where they can be able to score marks. The issue is about scoring good marks on a question. For example, if you are to pass taxation, advanced taxation, you must ensure that question number 1, minimum you can score is 25. That's the minimum marks that you should score on question number 1. Then the remaining questions, at least you can score 10 minimum. In that case, you are going to be on the safe side of passing your paper. And to be able to do that, you need to make sure you do a proper planning of your time. Knowing that these 4 questions, how many minutes per question? But question 1 needs double of other minutes because for it takes double marks of other questions. So that is the techniques that I can share with you from my experience. Now, I want us to look at some of the key areas that are going to help you to pass this paper. In most cases, the first part of the question is on direct tax, or direct tax takes almost 60% of the paper. So knowing law number 16, it gives you an upper advantage of passing your paper. If you know law 16, that is direct tax, which is going to be knowing how to compute employment income, knowing how to compute corporate income tax, it gives you and other related issues on direct tax. The whole frame of law number 16 is very, very important for you to be able to pass this paper. It should be part of your asset that you have in your head. The law number 16. Another important law that is going to help you is the VAT. Knowing the issues of calculating VAT and other related issues on VAT, it should be part of the assets that you are equipped or that you have before attempting your exam. Now, I want us to look at some of these parts briefly and giving highlights on how to handle those parts. I'm going to begin with corporate income tax. Corporate income tax, from the previous, it has been almost taking 40% of the marks on the paper, the direct tax. Now, how are you going to handle a question on corporate income tax? Remember, we have said need to budget, need to have a watch, and plan your time. Now, when you are handling a question on corporate income tax, there are mainly 3 important things that you should know on corporate income tax. I've divided them from A, B, C. Those are the core issues that are going to help you to answer a question on corporate income tax. The first thing you should know is the taxable incomes of the company. what are the taxable incomes? Which incomes are going to be taxed and which incomes that are not taxed? So that is going to help you to know your incomes. Then part B, which is very, very important. In most cases, the question is rotating on this part B. The part B, knowing the allowable and non-allowable expenses. Which expenses that are allowed for tax and which expenses that are not allowed for tax. Any question on corporate income tax is going to rotate on this part. The most of the time, examiner wants you to know whether you can be able to separate that these expenses are allowed, these expenses are not allowed. So if the expense is not allowed, then you can be able to disallow it. So when you have your pro forma, you have your profit before tax. You know the pro forma, the profit before tax. On the profit before tax, you are going to add back the non-allowable expenses and then less the allowable expenses. So please ensure that you know the expenses which are allowed and the expenses which are not allowed, and you can be able to adjust those expenses. Part C, which is also important, is be able to compute the capital allowances. What do we call the capital allowances? Capital allowances, by definition, we say it is the standardized depreciation for tax purpose. The depreciation that is allowed for tax. Now, when you are computing your capital allowances, most of the key area in the computation of the capital allowances is investment, what we call investment allowance, or what we call accelerated depreciation. That's the most important part when it comes to capital allowance. The other part of capital allowance is the normal depreciation, depreciating an asset normally. If a question provides assets, automatically you are supposed to calculate depreciation. And if it is a registered investor, if the question specifies that the business or the company is a registered investor, then you are supposed to compute the investment allowance, or what we call accelerated depreciation. It is a very, very critical part. It takes like 10 marks, between 8 to 10 marks, this part of capital allowances. But as I've said, when you are computing, the critical part in the computation of capital allowances is to know whether it is the company is a registered investor or not a registered investor. If it's a registered investor, automatically you are supposed to compute the investment allowance, or what we call accelerated depreciation. But if not, the company is not a registered investor, then you are only computing the accelerated depreciation. I mean, you can only compute the normal depreciation of assets. We also have other parts as far as corporate income tax is concerned. Knowing the corporate restructuring. What do we mean by corporate restructuring? How can we apply it in taxation of businesses or in taxation of companies? From the definition of corporate restructuring, it is either a merger of companies, an acquisition of 50% share, an acquisition of 50% asset and liability, a takeover, or splitting the business. So the important part here is knowing the tax implication, not knowing the definition of corporate restructuring, but knowing the tax implication on corporate restructuring. If there is a corporate restructuring, what is the tax implication of that restructuring on what you are computing as the corporate income tax? When there is a corporate restructuring, remember, if you look at that corporate restructuring, the transferring company is exempted from the capital gain. So if there's any capital gain, in that case, it's not going to be taxed on consolidated statements. So that is, you should know the applicability of corporate restructuring. Another important part in a corporate income tax is the liquidation of company. You should know if there is a liquidation of company, how do we tax this liquidation? The liquidation of company, of course, we tax the proceeds from the liquidation. And the proceeds from the liquidation, we calculate them by looking at your assets, the money you have sold the asset, and the liabilities you have, and the capital. What is going to remain on liquidation is what we refer to as a liquidation proceeds. And that one, you calculate tax on it at a rate of 15%. Another important part in corporate income tax is knowing the tax incentives available to companies. Knowing the tax incentives, because this is going to help you even in planning, in tax planning, knowing the tax incentives. So if you look at the law or the investment codes, there are certain incentives that are available for companies. We have the tax holiday, we have preferential corporate income tax rates of 0 and 15%. We have a 5-year holiday. You should know how to incorporate those incentives into real life of taxation. Different incentives, you should be able to incorporate them into the real life of taxation and in planning of taxation. Another important part as far as corporate income tax is concerned is what we call the longer-term contracts. Longer-term contracts. What we call longer-term contracts are those contracts that exceeds one tax period. So for tax purpose, if you have a longer-term contract, you need to look at the part of the work completed at the end of the year and declare a tax on it. Meaning, you should know how to allocate revenues and expenses from the long-term contracts. And when you are allocating, of course, you are going to use the percentage of completion. So the part D, E, F, and G are additional information or additional parts that can help you to maximize marks on corporate income tax. But the computation is more on part A, B, and C. They are the core parts as far as corporate income tax is concerned. Then, another important part in the direct tax, another important part in the direct tax is employment income. Being able to compute the tax on employment income and being able to compute the taxable employment income. Now, this part sometimes confuses because practice, we know that employment income is computed monthly. But the tax law, the pay-as-you-earn system, is classified into two. We have the monthly bands and the annual bands, meaning you can be able to compute monthly employment income, you can compute annual employment income. So you should be very careful with the question on employment income, whether you are computing for month or you are computing for year. If the question requires annual employment income and for you compute monthly employment income, even if you have maximized it, no one is going to, you are not going to score anything on that part. So please read very well the question on employment income. Understand the tax period for which you are supposed to compute your employment income. Then another important part on employment income, once you have identified the tax period, is knowing the sources of employment income. Practically speaking, the question on employment income, it only has got three important information. If you analyze the question of employment income, it has got three important information. You need to know the sources of employment income, meaning you need to know what do we include in employment income. So you need to know those different types of income, salaries, wages, bonuses, and others. Then another important part that you should know as far as the employment income is concerned is the incomes that are exempted from employment. Incomes which are exempted from employment. Which incomes are taxable, which income are exempted. Then the third part is the benefits in kind. How do we compute the different benefits in kind? The motor vehicle, the house, the loan, salary advance, those are different benefits in kind. You should know how to adjust each of those benefits in kind. The advice that I can give on such questions on employment income is that if I have my pencil, when I'm reading through the question, I'm going to mark. When I read that this is salaries and wages, Then I say this is cash benefit. There is a bonus. I say it's a cash benefit. I write cash benefit. Then I go down transport allowance, cash benefit. Communication allowance, cash benefits. Motor vehicle, benefit in kind. House, benefit in kind. School fees, benefit in kind. So by the time I finish, I have already identified my cash benefits, have identified my benefit in kind, and have identified which the incomes that are exempted. Please, as I've said, the question on employment income rotates on three key information: the income that is taxed in employment, the income that is exempted in employment, and the benefits in kind. Those are the key important information. Then also knowing the tax period for which you are computing your employment income. Are you computing for month? Are you computing for year? Because for employment income, it has got two tax period. You have a monthly, you have annual. It is allowed to compute annual employment income. So you should be able to identify that information in your question, then identify the cash benefits, identify the benefits in kind, identify the income that is not taxed or the income that is exempted. Once you identify those key information, then the question on employment income is finished. The other important part when you are looking at employment income is a casual labor. If you have a casual labor, you don't tax the casual labor in the pay as you earn system. Because the other employment income, you are going to tax in the pay as you earn system. But for a casual labor, does not follow the pay as you earn system. The casual labor is taxed at 15%. So you need to analyze whether you are dealing for a contractual employee or you are dealing with a casual labor. And who is a casual labor? The law is very specific when it defines a casual labor. A casual labor we define as an employee who does not use specific skills. That's what we define as a casual labor. So you need to look at, if it's a casual labor, how am I tax this casual labor? Then another important part is a second employment. Is he a first employer or are you dealing with second employment? The first employer, you tax using the pay as you earn system. We know that the pay as you earn system, you tax the employment income in bands. If it is monthly, from 0 to 30, 0%. From 30 to 100, 20%. 100 and above, 30%. Then for annual, if you are dealing with the annual, you know you're multiplying the monthly by 12. Then, if you are dealing with a second employment, is not taxed under the payee. A second employment is going to be taxed at 30%. You don't calculate bands. The bands are calculated on a first employer. Hello? Hello?
Yeah, we
Hello?
can hear you. Hello?
We are together?
Yes, we are together.
Okay. So that is, I see Karine. Karine has raised the hand. Maybe,
Let me give
yes?
the right to talk.
Can we talk after the, what's the procedure, Strato?
Ada?
Hello, what's the procedure? Are you going to talk after each topic or we should do?
The better way you can raise the question at the end of every chapter.
Every chapter?
Yes.
Okay, let me so handle the first parts of the questions.
Okay.
Yes, Karine. Karine. Hello,
Yes,
Karine.
yes.
Yes, you had a question, eh?
No, I don't have a question. I just want to say that we are together.
Oh, okay.
Yeah.
Because I saw you had raised a hand.
Even Chimucho.
Semucho,
Yes, I can understand.
do you have a question?
Yes, of course. I have a question on just the first part completed, even though just I joined the rate after
On corporate income tax.
but what I want, even though I'm rate, I don't know if you just ever participate in the exam setting, because just I want to be clear whether a question, if it includes many issues, have you just exam setters
I'm an experienced teacher. I'm not setting. But from experience, the question may have different issues. But what I've said is that try as much as possible, because you cannot know 100% of the question. That one is impractical. Try to ensure that you maximize marks of the parts that you know. If time allows you, you can come back to other parts. Otherwise, you cannot maximize all the marks on the question. If you go to maximize marks on the whole question, you are not going to finish. Kasanyu,
Hello.
yes, please. You have a question?
Yes.
Yes.
Thank you so much, Mr. Daniel. I would like to ask on capital allowance, where you said some questions need us to calculate the investment allowance. How do you identify that this question needs when you're computing capital allowance, you're going to also deduct the investment allowance and another question which does not require that? Thank you.
Yes. Yes, thank you very much, Janet. The moment you see in a question that the company is a registered investor, that information that the company is a registered investor, automatically you are supposed to calculate the investment allowance. If it is not a registered investor, then you calculate depreciation only. Is it okay?
Yeah, it's okay.
Another
Understood.
question? Any other question? I'm seeing two participants raise the hand, but I can't see their name.
Hirwa Gitare.
Okay.
Oh,
Gitari.
thank you, Dr. Daniel. Thank you.
Yes.
I'm listening to you.
Mm.
I would like to just come, if you can come again on the issue raised by Janet.
Yes.
It's very interesting. I would like to know more because I'm not understanding well. Thank you.
Thank you, Gitari. Now, when we are looking at this part, the capital allowances, the capital allowances is mainly composed of two components. Mainly two components. You have the normal depreciation, and you have what we call accelerated depreciation or investment allowances. Now, there are conditions to calculate investment allowance. The first condition is that the company must be a registered investor. That's condition number one. It must be a registered investor. If we don't see that word, registered investor, don't calculate investment allowance. Then condition number two is that you should look, you can be registered investor. Yes, you tick that one is okay. Then condition number two is that the values of asset invested in must be at least 50,000 US dollar. So you look at the value of the asset compared to 50,000 US dollar. If the value reaches 50,000 US dollar, then you are supposed to compute an investment allowance. Another important thing is that the business must invest in priority sectors. We have got some priority sectors where the entity must invest in: manufacturing, export, ICT, transport. Those are some of the sectors where you need to invest. And to add on that, the investment allowance is calculated once. If you have calculated this year, next year you don't calculate investment allowance on the same asset, unless there is a new investment in the asset. Is it okay?
Yes, it's okay. Thank you.
I don't think we have another question.
Let's continue.
We are looking at this employment income, and I said, when you are attempting the employment income, please look at the tax period is critical important, because if the question is monthly and for you compute in annual, you are not going to score marks. Or if the question is annual and you have computed the monthly, you are not going to score marks. So please try as much as possible to identify the tax period in which you are computing your tax. Is it monthly? Is it annual? Then another important is to know the sources of employment income. What are included in the employment income? So in this case, when you are attempting a question, please, when you are reading through the question, get your pencil. When you read in employment income, if it is a cash benefit, you mark it cash benefit. If it is a benefit in kind, then identify it as a benefit in kind. Somewhere that you can help you when you are computing. By the time you finish to read through, you have got the cash benefits, you have got the benefits in kind, and you have the income that is exempted. What remains is to just compute or prepare your taxable income. Then we have the casual labor. When it comes to the casual labor, we don't tax them under the payee system. I said the payee system recognizes two computation of tax, the monthly and the annual. But when it comes to casual labor, we don't tax the casual labor under the payee system. The casual labor is taxed at 15%. And I defined who is a casual labor. A casual labor is the one who does not use specific skills. And when you are computing, the 30,000 on the casual labor is exempted. You don't calculate tax on the first 30,000 of a casual labor. Another important thing I talked about is second employment. When you are computing tax for a second employer, you calculate at 30%. You don't calculate second employment as payee or under the payee system. So that is what I've talked about as far as employment income is concerned. I don't know if there is a question. Please, if there is a question, you can raise your hand on this part. We move on. Hello.
Hello, Daniel. We can move on.
I see they are certified, or they have. Another important part. Another important part in the exam is VAT. As far as VAT is concerned, these are the key areas that you should be very conversant with when you are tackling a problem of VAT. First, you should know the supply. Nathan? Nathan? Hello, Nathan? Nathan?
Yes, sir.
You have a question?
No. Go ahead.
I see you have raised a hand.
No, that's it, an error.
Okay. I was saying, when you are handling a problem on VAT, these are the key main areas as far as VAT is concerned. The first area, you should know what we mean by the supply of goods and services. What are the supply of goods and services? In this case, I'm meaning you should have knowledge on exempted supply, what are included in the exempted supply, exempted supply, you should know the zero rated supply, and you should know the standard supply. What items are exempted, what items are standard, and what items are zero rated. That is very critical when you are computing a tax, a VAT, knowing your supply. Another important part when it comes to VAT is the taxation period. Although technology has changed this, but the law on taxation period has not yet changed. Taxation period, we mean the period in which you should recognize a transaction of VAT. So you should be very conversant with how to use the taxation period for goods and services, recognizing a transaction, whether that transaction has occurred or the transaction has not occurred based on the taxation period. Another important common part is a foreign service. When a taxpayer acquires a foreign service, then when you are analyzing this part, you need to look at two important questions, or you should analyze two important issues as far as a foreign service is concerned. Whether the service is available in Rwanda or the service is not available in Rwanda. So if you have a situation and where a taxpayer has acquired a foreign service and that service is available in Rwanda, in that case, you are recognizing a reverse charge, VAT. So it is assumed, or it's going to be taken as if the taxpayer has exported a service, has purchased a service, or has sold, sorry, the taxpayer has sold a service, not purchasing a service. I want to repeat that. I'm saying when you are dealing with a foreign service in VAT, you need to analyze two important issues. The first issue is the foreign service available in Rwanda? And if a taxpayer has acquired the foreign service and there are people in Rwanda who can do the same job, then it is taken as if the taxpayer has sold a service. And therefore, you are going to recognize what we call a reverse charge. On the other hand, if a taxpayer has purchased a service and no one in Rwanda can do the same service, then in that case, you are recognizing an input VAT on that service. So it is very, very important to look at those two issues when you are analyzing a foreign service. Another important part that we need to look at in this is valuation of goods and services. How do we value the goods and services? Most important on imported goods, the value of imported goods. Because when you're looking at the local goods, we look at two things. You are going to look at the consideration, what the taxpayer has paid to acquire the goods, or the market value. But when it comes to imported goods, then you need to know how to compute the import duties, the excise duties, and other relevant taxes. Because for imported goods, the value or the custom value for VAT will be the CIF plus those customs tax. So you should know how to compute the customs tax. Which one should you compute first and which one should you compute last? You cannot compute excise before computing import, because import is a cost on an exercise. So you should, when you are dealing with that, you should compute your import duty first, then you'll be able to compute the excise. You cannot compute VAT unless you have finished computing import and excise. So that is how you are going to handle this valuation. Look at the local goods and the imported goods. Another important part when you are handling a question on VAT is input VAT allowance. What do we mean in this? What we mean is if you have purchased goods which are standard, but the output from these goods, part are standard and part is exempt, or part is taxable and part is exempt. Automatically, you are supposed to adjust for input VAT allowance. Which VAT are you going to claim on these goods? When you adjust for this, of course, as we have said, part of the VAT on these goods will be allowed. Part of the VAT on the goods is not going to be allowed. The VAT on the goods that is not allowed is recognized as an expense in your profit and loss statement. So you will compute it and recognize it as an expense. The one that is allowed, you are going to recognize it in the computation of the VAT payable or claimable. How do we adjust this? The input VAT allowance. To adjust this, we get the total input VAT times taxable sales divided by total sales. Then you can get the input VAT allowed. I want to repeat that. When you are adjusting for your input VAT, you get the total input VAT on the goods times the taxable sales. And when we talk of taxable sales, we mean standard sales and zero-rated sales. Then you divide by your total sales. And your total sales will include the standard, the zero-rated, and the exempt. That is, you are going to get the input VAT allowed. Another important part when we are dealing with the VAT is the VAT on pre-registration. VAT on pre-registration. If a taxpayer had purchased goods before registering, and then after maybe some time he registers for VAT, the taxpayer can be able to claim an input VAT on the goods acquired before registration. So you need to know how to incorporate that into your transactions. Then another important part when we are dealing with the VAT is what we call a post-sale adjustments. Post-sale adjustments. When it comes to post-sale adjustments, we look mainly on three important parts. 3 or 4 important parts. How to adjust discounts, how to adjust bad debt, how to adjust debit note, and how to adjust credit note. When it comes to post-sale adjustment, I'm saying you need to look at these 4 important issues on post-sale adjustment: the discount, the bad debt, the debit note, and the credit note. If I start with a discount, if a taxpayer has provided a discount Whether the discount has been taken or not, we should record the goods on net. So you must adjust the discount on the goods, whether it has been taken or not, as long as the taxpayer has offered a discount. Then another important part is the bad debt. A customer may have sold the goods and the customer fails to pay, or taxpayer sold the goods and the customer fails to pay for those goods. Then you are supposed to adjust for the bad debt. However, before adjusting for bad debt, there are certain conditions that you must consider. First, the bad debt has been written off from the books. It was included in the previous sales. 3, you have taken steps to recover and you have failed, and you have evidence that the customer is not able to pay. You have a court decision that the customer is bankrupt. So if a bad debt fulfills those conditions, then you can do a post-sale adjustment. You can adjust you can add it to your input, or you can erase it on your output. Another important is a debit note. You sold the goods, the customer brings back the goods. Those are the return inward. When the customer brings back the goods, it comes with a debit note for you issue a credit note. So if you have a debit note, it means you are supposed to adjust your output VAT with a debit note. If you have a credit note, you are supposed to adjust your input VAT with a credit note. So those are the 4 important things as far as post-sale adjustments. I'm going to repeat them for you. The discount, the bad debt, the debit note, and the credit note. Bad debt, you can add to your input, or you can erase to your output. Debit note, adjust your output. Credit note, adjust your input. Then another important part that had maybe not included here is the VAT registration. VAT registration. When should we register for VAT? We have got 2 important issues. You can register compulsory, or you can register voluntarily. Register compulsory, it means you reach a certain target in your turnover, or you reach a certain level of your turnover. For compulsory registration, if your turnover reaches 5 million in a quarter, 20 million in a year, you are supposed to register for VAT. And when we are calculating this, we calculate it on the taxable sales. We don't include exempted sales. So taxable sales, you're going to look at your standard sales and the zero-rated sales. If you reach 5 million in a quarter, then you can register for VAT. And when you are computing this, each quarter is independent. So you do the first quarter, 1, 2, 3. If it doesn't reach, you go to another quarter, 1, 2, 3. Each quarter is independent. The last part I can talk about are the penalties for the violation of VAT law. You should know the relevant penalties when you violate the VAT law. The good thing, these penalties are almost similar to those of the EBM. So any question on this part, members? Hello?
Need.
Any question from the members on this part of VAT?
Anyone with question, you can raise your hand.
Mucho. Mucho.
Thank you.
Hello, Mucho.
Yes, hello?
Yes, please.
Hello?
Yes, we are hearing you.
Yes, hello?
Yes, we are hearing.
Okay. Just I have a question on this VAT. Okay,
Yes.
I have a question on this VAT computation.
Yes.
On the point of VAT pre-registration. My connection went off, then I didn't catch well about that. If you can just shed the light on that VAT pre-registration, it will be okay. And also on the last question, when my connection went off, I wanted to know if in the question setting, all issues will be clear to the candidate so that he will not mix up the issues when just cases has been asked in one question.
Okay. So what I was saying, the VAT on pre-registration is that if you have purchased goods before registering for VAT,
Yes.
and afterwards you register for VAT,
Yes.
then you can be able to claim the VAT on pre-registration. However, there are certain conditions that you must fulfill to claim. First, the goods are still available in stock. That's condition number one. The goods are not yet supplied. Condition number two, you have all the invoices for the goods. Condition number three, the goods were purchased for the direct purpose of the business. And the condition number four, the goods were purchased in a period of 4 years. If it is a service, it was purchased or consumed in a period of 6 months. Then you can be able to claim the VAT on those goods. Yes? Hello?
Yes, hello?
The other issues, of course, It is you to be able to identify these cases in the question. It is your role. The examiner can ask them, can put them in different frames. It is you to identify these issues in your question. Examiner is not going to tell you this is a foreign service, this is what. No. He can say he purchased goods, he purchased a foreign, he acquired a foreign service. So it should be you to know if there is a foreign service, how do I handle this foreign service? The goods were purchased but not supplied or not received. Then you should know, oh, what is the tax period for these goods? Should I recognize them in this period or not? Or you can be given a variety of goods. Then it is you to identify that these are zero rated, these are exempt, and these are standard. So it is your role, you as a student, to identify the key issues in the question set by the examiner. And any question, another question? Another, I've seen a question from someone asking, it is in a message. What is the period considering when taxing a casual labor? If one worked 10 days and the other 40 days are all taxed, the answer is yes, as long as he meets the condition of a casual labor. And we say the casual labor is an employee who does not use specific skills. I've been employed by Equipara today. They cannot call me a casual labor, although I'm working one day, because I'm using skills. I'm not a casual labor, but they can take it as a second employment. I think I've answered you, iPhone. Do you have any other question on VAT? I've seen two people raising hands, but I can't get their names. Dear colleague, do you have any other question on this VAT?
I think we can move on if no people or they are having just a connectivity issues.
Okay. Galaxy. Hello, Galaxy. Galaxy tab. Someone with Galaxy. Okay, we can go because you have raised a hand, but you cannot speak. Yes, hello. Hello, Galaxy. Yes, in the Chaiseng. Jean Pierre. Hello, Jean Pierre.
Hello.
Yes,
Hello.
you have a question?
Hello.
Yes.
Hello. Hello.
Yes, we are hearing Jean Pierre.
My question is, I have a question on casual labor.
Yes, please.
What is the period to consider it as a casual labor? Is it 30 days, or for example, if someone has worked 50 days or 40 days?
Yes. The law is the 50 days.
A period of tax for the casual labor.
It's 3 months.
I think the law is stipulate 50 days only.
No, 53 months.
3 months.
Yeah, you cannot exceed 3 months as a casual labor. If you exceed 3 months, they say that it should be permanent.
Okay.
Yes. Another one? Hello?
Hello?
Yes.
Do you hear me?
Yes, we are hearing you.
I'm Joseph.
Yes.
And I have a question on reverse charges. Reverse
Yes.
charge. Don't
Yes.
understand clearly how this is applied on local.
Yes.
I have a problem with the reverse charge. I
Yes.
didn't understand well how this is applied.
A reverse charge.
Yes.
If you purchase a foreign service,
Okay.
and the foreign service is also available, in Rwanda, you are considered as if you have sold a service.
Okay. Okay.
And therefore, you are recognizing an output, not an input.
Okay.
Yeah. Any other question?
Hello?
Yes, please. Yes.
Yes,
Period.
thank you.
Yes.
Yes, I would like to know, I don't know if I'm going far,
Yes.
but is there any difference between second employment and professional tax? How can we differentiate them?
Professional second
Yes,
employment.
or 15%.
If you go for second employment, it's different from the other professional tax. Because if you go for second employment, like now for me, I'm considering ICPAR as my second employment. This job I'm working, I can consider it as a second employment. And therefore, you're going to be taxed at 30%. But if you go for profession, it becomes a service you're providing. And in that case, you are not in employment, you are in a business. Are you getting me?
I'm getting you, but let me just give an example. For example, in the enterprise, there is someone who is just teaching a software for the employee of the company. How can we consider it?
That one is a consultant. If it is a consultant, it is a self-employment. It is a business. It's not a second employment. You get it?
So is it going to be taxed 15% or 30%?
For that, it's going to be, it depends. If that person has got a team, then you are supposed to withhold 15. or you are supposed to withhold only 15%.
If he has got TIN number, just he pay, you withhold 30%. That's
No,
what you say?
huh? If he has no TIN, of course you are
Yes.
supposed to pay 30% tax, not the 15.
Okay.
Yeah.
So if he has TIN, it's just
You
15%.
just make a withhold.
Okay, thank you.
And do you have any other question on this?
No, thank you.
So let's look at briefly this. These are just additional parts for the main parts as far as this paper is concerned are 3. But you can also exhaust other parts. In the audit and investigation. So in audit and investigation, there are mainly 3 important parts that you need to know. You need to know the different types of audit. Please, this is a new law. There is a new law on taxation procedures. So be very careful with that new law on taxation procedures. Try to look at the types of audit that are identified in that new law of taxation procedures. The unique audit, the desk audit. Be very conversant on how to use that new law on taxation procedures. Then it's also important to know what are the conditions for audit. If you want to audit, then what are the conditions for auditing a taxpayer? Then another important part is tax investigation. How do I carry out an investigation? You should know the different methods that are used in the investigation. The backer duty, the income approaches. You should not, these methods are available when you are carrying out investigation. And it is also very important to know how to calculate a tax using a backer duty. For example, if you are investigating someone without books of accounts, or you are investigating someone from the balance sheet, how can you compute the tax from the balance sheet? Looking at the increase in revenue, increase in assets, increase in liabilities, then you can be able to determine a tax from, you can be able to calculate a tax. So try to look at these tax investigation methods and then how do they operate in practice. That's what I can talk about this tax audit and investigation. Knowing the different types of audit, knowing the conditions for the audit, and the methods that are used during a tax investigation. Another important part is tax planning. Tax planning. In tax planning, there is no clear format of how you're going to do a tax planning. But what is important in tax planning is knowing the tax laws. You cannot do a tax planning without knowing a tax law. Because what we do in tax planning is to find the loopholes or the gaps in the tax law. And you can only be able to identify a gap if you have read exhaustively the tax law. So you should be able to know how to play with an information. And when you are handling a question on tax planning, try to identify what are the different options that are available. For example, if maybe I'm talking about financing, the way I'm planning a tax based on financing, I'm going to look at two options that I have. I have a debt, I have equity. If I use a debt, what are the advantages of using a debt as far as tax is concerned? Then if I use equity, what are the advantages of using the equity capital? And what is going to happen to my profit? So whenever you are dealing with an issue of the tax planning, try identify the options available in the question. And when you identify the options available, try to look at the benefit of each option as far as tax is concerned. When we are doing a tax planning, the important part in the tax planning is to minimize the tax. So your advice on the tax planning should be based on tax minimization. Where does the taxpayer enjoy the tax? I said, when you are dealing with a question on tax planning, try as much as possible to identify the option. Once you identify the option, then try to look at the benefits of each option. Another example I can give, maybe lease. The company is making an option to either purchase an asset or lease an asset. So if you say, if the company is going to purchase an asset, that's the option number one, is purchasing an asset. Then what are the tax advantage on purchasing? Then you say you can identify. It's going to enjoy investment allowance. It's going to enjoy depreciation. Then you look at that. Then you go to the option of leasing. If the company has opted to lease the asset, what are the tax advantage on leasing? Then you say there is an interest on the lease. Then I'm also going to depreciate the asset that has been raised. Then once you identify those options, incorporate them into the question and see the tax that you are supposed to pay. Where you minimize a tax burden is the best alternative for the taxpayer. So you should look at, but the scope of tax planning is going to depend on how you know the tax law. So the scope is not limited, but it's going to depend on how you know the tax law. Any question? Hello. Hello.
Hello, Daniel.
The members have a question.
No question, no hands raised.
Are they on?
Anyone with question can raise hand or write a comment in the chat box. Hello, Chitade.
Sorry, I'm not just asking. It was an error.
Okay. So there is one comment. Can you come again on tax planning?
Yes.
So there is one who has said, can you come again on tax planning?
Yes. I saying tax planning by definition is how you arrange your financial resources or financial accounts in order to minimize the tax. You want to avoid tax. So when you are dealing with the issues on tax planning, the first important thing on tax planning, you should know the tax law very well. If you don't know the tax law, it is very hard to do a tax planning. And when you are planning a tax, when you are carrying out a question on tax planning, or when there is a question on tax planning, try as much as possible to identify the options in the question. I was giving an example, a lease. A taxpayer may be wanting to make, or may want to make a decision either to lease the asset or to buy the asset. That's the option I have. Meaning in this question, I'm having two options, leasing or purchasing. Now, if you decided to lease, I'm going to ask, if I decided to lease, what are the tax advantage on a lease? Maybe the tax advantage on a lease is that I'm going to enjoy depreciation on the asset. I'm also going to enjoy the interest on the asset. That is option number one. Then I go to my option number two, which is purchasing the asset. If I decide to purchase the asset, what are going to be the tax benefits? I can say, if he's a registered investor, I'm going to enjoy investment allowance. I'm also going to depreciate the asset. Then prepare your profit statements for the two options, incorporating those tax advantages. So after incorporating the tax advantage, then compute your tax. Where you minimize the tax, it is going to be the best option for the taxpayer. So you should know, you should be able to identify the options in the question. If you fail to identify the option in the question, you cannot do tax planning. Because what you need are the tax advantage of each option you have identified. I don't know if there is another one. Any other issue, question?
No question, we can move.
I'm seeing Eugene has raised a hand.
Asian, okay.
Eugene? Manera Guha?
Yes, sir.
Yes.
Allow me to take you back to the employment income.
Yes, please.
For the case of benefit in kind, in a case the company provide a house or a car, and then the company pays directly the car or the house. How is he taken as a benefit in kind or cash benefit?
Based on the new tax law, it is considered as a cash benefit if it is paid.
Okay.
You are considering as a cash benefit, not a benefit in kind.
Okay.
Yes.
Thank you.
Another important part that we need to discuss is what we call transfer pricing. Transfer pricing, we define it as the price between the two related parties. The price between two related parties. And when it comes to related, we mean a parent company and maybe a subsidiary company, or a holding and a subsidiary. Now, if there is a transfer of goods from one of the company, we are saying that the price between the two related parties should be in an arm's length. So in this part, the main important parts as far as transfer pricing is concerned is knowing the methods of establishing an arm's length price. Methods of establishing the arm's length price. How do we set up an arm's length price? Our tax law provides mainly three methods, but we have got other methods to set up an arm's length price. You can use what we call the controllable and controllable price. You have the resale price. You have the cost plus. You have the net margin. So you should know how do we use this in practice. If you say the controllable and controllable, how do we use it? How do we adjust our prices using the controllable and controllable? How do I use the net profit margin to adjust my profit? Because our issue in this, how the transfer price has affected your profit. If company A has transferred the goods to company B, then our interest in this is on whether the profit has been understated by the transfer between these two companies. So you will have to calculate and find out whether the price is an arm's length or the price is not an arm's length, using the different methods that we have talked about. And when it comes to this part of transfer pricing, because we don't only look at the goods, we also look at the service. Services like management, services like technical fees, services like a loan. When it comes to some of these services, the law is very clear on them. For example, if there is a loan between two related parties, the law is very clear that the loan should not be 4 times more than your equity. So you should adjust that based on that law. If there is a management fee, company A provided a management consultancy to company B and it charged it money, then the question is that transaction in an arm's length? Still, the existing law is very clear that you are going to consider 2% of the turnover and compare to what was charged. So when you are dealing with arm's length, you should look at it by knowing the methods that you can use to set an arm's length price. You can look at it in terms of the services provided and look at it with the existing law on how to capture the arm's length price. Any question? Any question on transfer pricing? Dear members, so another important part.
Daniel,
yes, please.
There is one question from Q&A box from Hakizimana Shanta Masen. He said, you said that casual labor is taxed at 15%, and the casual earn 30,000 Rwandan francs is charged at 0%. So I asked whether before computing tax at 15%, if you deduct amount at 0%.
Yes, that's what I said. I said, if you are dealing with the casual labor, the first 30,000 is exempted. So you get the amount minus 30,000, then you multiply by 15%. That is how it is done. You get the amount received. If it is 100,000, it will be 100,000 minus 30, then times 15%. Any other question from the chat book? Hello, Strato. Strato.
Yes,
do you have any other question from the chat?
No other question from chat book. No.
So, another important part is customs administration. That is management of exports and management of imports. So what is important here in customs administration is to know the rules that governs the East African Customs Union. And when it comes to East African Customs Union, it is important to know the trade liberalization policy. What are the trade liberalization policies as far as customs is concerned? What are the rule of origin? The issues on the rule of origin. What is the rule of origin and what are the issues on the rule of origin? Then look at the schemes that are available to promote export in East Africa. What are the relevant schemes which are available to promote export in East Africa? The manufacturing under bond, the export processing zone, the free zone, the inward processing. Those are some of the schemes available to promote exports in East Africa. Then rule of origin, you should know what are the conditions for the rule of origin. Wholly from the East Africa, partially from East Africa. And then how do we apply the rule of origin? Then trade liberalization policies, you should know how to deal with tariff, how to deal with non-tariff barriers, and the common external tariffs. Because when it comes to trade liberalization policies, we mainly look at three important: the tariff barriers, the common external tariff, and then the non-tariff barriers. How are they applicable in this law? So those are the key issues that I can talk about as far as the East African Customs Union is concerned. Then another important part, which I've also talked about in VAT, is the valuation of goods. Of course, if you look in we have got different methods of valuation. How do we determine the custom value? Apart from determining the custom value, we know also how do we calculate the value of goods at the customs. As I've said earlier, that when you are dealing with the valuation of imports, then you should know the customs tax that are chargeable on those imports. The import duty, the excise duty, the infrastructure tax, the VAT, and other taxes that are chargeable on imports. So you should know which tax am I going to compute first, which tax am I going to compute last. You cannot compute VAT before computing your import and excise. And when it comes to CIF, that is where so many challenge comes. When you're looking at CIF, we look at it at the port in Mombasa or at the port in Dar es Salaam. That's where we're going to determine the CIF, not at Kigali, unless the goods have come by air. So you should know how to determine the value of imports and how you can be able to determine the value of your exports, the FOB. So that is what I can talk about as far as the East African Customs or the Custom Administration is concerned. Knowing the East African Customs Union, Is it okay? What are the features of the East African Customs Union? Knowing the trade liberalization policies in the East African Customs Union, knowing the schemes that are available to promote export in East Africa. And another important part in this law is the rule of origin. What do we consider in the rule of origin? The partially, where you have to consider 60% and 40%, and the whole. Which goods do we consider whole from the member state? Which goods do we consider partially from the member state? And how do we differentiate that? So that is what I can talk about in this part of the East African, in the customs administration. So another important part that we can talk about, and please, that you should read, because this one is a new law, the taxation procedures. There has been some changes in the fines and the penalties. Please ensure that you get well covered with the new changes. With the new changes, in the calculations of penalties and fines. Please look at that part of the new changes. Another important is the tax recovery procedures. There have also been some adjustment in the tax recovery procedures in the new law of taxation procedures. So please look at the tax assessment, the unique audit, the different types of audit, as I have said earlier, the assessment without notes. Go through the audit and the investigations. Those are some of the issues that you should be very comfortable with as far as taxation procedure is concerned. So those are some of the areas that I wished to share with you during this presentation. So I will be very happy if you have more questions to ask as far as this presentation is concerned. So I'm back to you, Strato.
Thank you so much, Daniel, for good presentation. So there is one question from Q&A box. When shall we calculate withholding tax?
Oh, maybe I should add another part.
Candidate, this is your time to raise a lot of questions.
So based on that question, I've developed this other slide on the question someone has asked. When do we calculate withholding tax? Withholding tax is not a final tax. That's what I can say. It is a final tax to some income, but not a final tax to other income, depending on certain conditions or certain situations. When do we calculate withholding tax? We calculate withholding tax first on these incomes. We calculate withholding tax on employment income. We calculate on interest. Nathan. Hello, Nathan. Nathan. We calculate on dividend, royalty, gaming activities, sitting allowance of directors.
Hello?
Yes, Nathan.
I was asking withholding tax on imports.
Yes, that's what I will say.
Okay.
And withholding on imports. It okay? So the withholding tax on employment, we calculate it under the pay system or for casual labor because it is the employer that withhold. Then when it comes to the interest, this one is under pay or the 15%. When it comes to the interest we withhold on bank loan or on interest on loan, deposit, banker guarantee, and other financial securities. We calculate a withholding tax. And the withholding tax on interest is 15%. However, for government securities with a maturity period of 3 years and above, the withholding is 5%. Then for dividend, we also calculate a withholding of 15%. And another exception on dividend is that if the shares are listed in the London Stock Exchange and those shares are owned by a resident of East Africa, then you are going to withhold 5% on the dividend. Another income that where we calculate withholding is royalty. Royalty, that is patent right, copyright, trademark, use of natural resources, and others. The withholding on royalties is 15%. Another income where we calculate withholding is gaming activity. For the game player, if you play a game, you win money, there is a withholding tax of 15%. But on gaming activities like a casual labor, the first 30,000 is exempted. We don't tax the first 30. So you get what you have won minus what you wagered, you get the winning, you less 30,000 and you multiply by 15%. Another income is the sitting allowance for directors. On the sitting allowance for directors, it is 30%. Then you have public tender. For public tender, the withholding is 3%. When you go to the imports, you calculate withholding. The withholding on import is calculated on the CIF of the goods. So you get the CIF of the goods times the withholding tax. And the withholding tax on imports is 5%. So these are the incomes where we calculate withholding, and we have also talked about the rates of withholding on each income. So when you are paying some of these, for example, from here, it is 15 days after the end of the month. Most of these 15 days, apart from the import, but out of this withholding, 15 days after the month of withholding. That's when we declare the withholding tax. So do you have any other question? Yes.
From chat box, there is one called Sivoru Rema.
Yeah.
He has, can you share us some of past paper with the respective solution related to the topic covered? I see practical one.
But I think in the notes that they have, they are sort of the question. They are sort of the examples, and those examples, some of them were from the past papers. So I think they can still go through that. Yeah. Nathan.
Yes, sir.
Yes.
Does withholding tax on imports comes after VAT?
No, because
yes.
You calculate withholding on the CIA.
Yes.
Yes. There is no relationship there.
Okay. Thank you.
Another question from Jean Baptiste. Can you please repeat method of determining arm's length price between related parties? Again, what are the schemes available in the East Africa community to promote export?
Okay, if I can talk about the first ones, the last question. The schemes available in the East African Customs Union to promote export, we have the export processing zone, we have the special economic zone, we have free zone, we have manufacturing under bond, and we have the inward processing. Then we have a duty-free back. Duty-free back, export processing zone, inward processing, manufacturing under bond, special economic zone, and then the free zones. Then when you go to the other question on transfer pricing, the method that can be used to determine a transfer price, we have the controllable and uncontrollable prices. We have the resale price, we have the markup, we have the net profit margin, and the net transaction margin. Those are the 5 steps, 5 processes. Any other question? I saw Nathan was raising a hand again. Hello? Hello?
Nathan? Janet?
Yes, please.
Janet, do you have a question?
Yes, I have a question.
Yes, please.
You can ask.
Yes, my question is about withholding.
Yes.
Do they charge you withholding on casual labor and consultants? Like if you hire someone for consulting services, do you charge withholding? And if yes, which rate?
It is 15%. But in withholding, what you mean because it is not the person who pays, not the one who takes it. For example, for casual labor, it's the employer. That's why we call it a withholding. Here, you have the pay, then you have the casual labor. For casual labor, it is 15%. And we said you first less the 30,000.
Okay.
So another question from Omorelko, can you repeat more on what percentage on interest, public tender, and the sitting allowance?
Yes, the interest, the normal withholding is 15%. And the exception here is that if it is a government security with 3 years and above, the withholding will be 5%. But the normal interest for for the normal tax for the other interest is 15%. Apart from government bonds with 3 years and above, that's where you calculate 5%. Then the second was on what?
The second was public tender.
Public tender, it is 3%. But sometimes public tender, they may have also VAT, you find that they pay almost 18%. But
also the sitting allowance.
Yes. Sitting allowance, it is 30%. The sitting allowance for directors is 30%.
Another question, I need clarification on input VAT allowance.
On the input VAT allowance, I said input VAT allowance, when it comes to the input VAT allowance, you are having in purchases, but from those purchases, you are producing two products, taxable and exempt. Now, if you have from similar input, but you are having two outputs, the taxable and the exempt, then you must apportion your VAT. When we are apportioning the VAT, we said we are going to get the total input times the taxable sales divided by the total sales. And I said, if you are talking of the taxable sales, we mean standard sales plus zero rated. Then we divide by the total sales, which is going to be 0 plus exempt plus standard. Then you're going to get the allowed input VAT. Now, the one which is not allowed, we call it irrecoverable input VAT. And the irrecoverable input VAT is going to be taken to profit and loss as an expense. Is it okay? Any other question you have in the chat box?
So no other question in chat box, but on question and Q&A box.
Yes.
Question from Hachizimana Chanda Masen. What is excess duty and when it is charged by RRA?
What is excise duty and when is it charged by RRA? When we are computing, what has gone wrong? When we are looking at the excise duty, is specifically a consumption tax. And if I can add something, now, when it comes, when excise duty, you can also talk as a consumption tax, because excise duty is a consumption tax. Now, when we are dealing with the excise duty, we have excise duty on imports, excise duty on imports, and excise duty on locally manufactured goods. Locally manufactured goods. Now, the excise duty on imports is paid the same time you are paying your customs tax, because it is calculated at the customs. And when we are calculating the excise duty on imports, we get our CIF plus import duty, then times the rate of excise duty. That is how we calculate the excise duty. And the payment is paid before the goods are released from the custom. Now, when it comes to locally manufactured goods, the excise duty on locally manufactured goods, we divide our tax period into 3. And each period, or we divide a month into 3 periods. Each period is 10 days. So the first period is from 1st to 10. That one is from the 1st day to the 10th day. That is a period. And you are supposed to declare your exercise on the 15th. You are given 5 days to declare your exercise. So the second period is from 11 to 20. And the last period is from 21st to the 30th. So in a month, you are going to have 3 periods. And the latest of declaration is 5 days after the end of the period. So the rates on the consumption are differing depending on the product. We have the rates on cigarette, the rate on alcohol products, the rate on beers, the rate on wines, they are different. So you can look at those rates and see how to apply them. I don't know if you have another question, Strato. Hello, Strato.
Hello?
Yes. Do you have another question?
Yes, another question from Mucho. Can you please shed the light on relationship between professional ethics in taxation and tax planning?
Professional ethics in taxation, they are similar to that in auditing. What are the professional ethics of an accountant? Integrity, professionalism. The same ethics of an accountant are going to be the same ethics of taxation. Tax planning, when it comes to tax planning, you want to avoid. But avoiding tax does not mean that you are going against the ethics. No, because you want to help your client not to pay too much tax. It is not unethical. to avoid tax. No. The unethical is to evade tax. If you evade tax, it is unethical. But avoiding is not unethical. Is it okay? Another question?
Which the rate of excise duty on import?
The rate of excise duty on imports, it depends on the products you have purchased. Different products, they have got different rates of tax. I cannot say that this one is the rate of excise. It's going to depend on that product. If you are purchasing a motor vehicle, it's going to depend on the engine of the motor vehicle. If you purchase these wines, it's going to depend on that product. So we cannot have a specific. But if you look in that law on consumption tax, the law on consumption tax, we have got different rates that we use in computing the excise.
Another question, how to treat the pension from previous employment for tax purpose?
Yes, if you have pension from previous employment, the law is very clear on that. The last part of employment income, it tells you that any income from the previous job, current job, and the future job is considered as an employment income. Meaning you are going to consider that income as part of the cash benefits an employee has received. So that is how we can treat you consider it as part of the cash benefit an employee has received. Is it okay?
Another question from Majambiri. We need more clarification on double taxation in the most favorable nation.
In the most favorable nation. Now, the issue on MFL, the issue on double taxation is that you need to know the agreement between those countries. We have got some countries like Belgium, Barbados, Singapore, South Africa, which have got agreements on double tax with Rwanda. So if a taxpayer is from those countries, it means is going to be taxed at that same rate. So the most of the double tax agreement we have are on withholding tax. I've not seen an agreement on VAT or an agreement on corporate income tax. Most of the agreement that we have or double tax agreement are on withholding. So if the taxpayer, for example, from South Africa and has earned a dividend in Rwanda, that taxpayer is going to be taxed at 10%. So it's not going to be taxed at 15% because there is an agreement between Rwanda and South Africa. Yes, I'm seeing some members have raised their hands. Hello? Hello? Hello.
Janet.
Janet. Hello, Janet.
Hello.
Hello?
Yes.
Janet.
Hello.
Yes, we are hearing you, Janet.
Hello?
Yes.
Sorry, the question I wanted to ask has been already asked.
Okay.
Champion.
Hello, Jean-Pierre. Hello, Jean-Pierre. Hello.
In the time of waiting, Jean-Pierre, there is one question from chat box from Jean-Baptiste. Suppose someone is employed somewhere and at the same time has the rented buildings where he is paid the rental income. Are those income taxed separately or combined and taxed together?
You know, when we are dealing with, when we are computing tax, that is very important to question. Please, you can only add the incomes if those incomes are taxed under the same tax law. You cannot add rental income of an individual to employment income because they are taxed in a different tax law. The other rental income is under decentralized and employment income is under the direct tax. You cannot add them. I want to repeat that. You can only add the incomes if those incomes are taxed under the same law and under the same rate. If there is a difference in the tax rates and in the tax law, we don't add those incomes. You cannot add rental income from a decentralized entity to the employment income. But we can add rental income from machine to the employment income because rental income from machine is under investment and it's under PIT, personal income tax. So you can be able to add to employment income. But rental income from rental of building is decentralized. It is taxed in a different way. So I don't know if there is another question.
Another question, in payee system, what is the meaning of qualified pension fund, private pension fund, and how they are treated in taxation of payee?
Yes. In the law talks of a private qualified pension fund. That's what the law says. Private qualified pension fund. So if an employer or an employee contributes in this fund, the money contributed in a private qualified pension fund is exempted from tax. You are not going to include it in the payee. But if it is just a private fund, not a qualified pension fund, then that one is taxed. You add it to your employment. What is exempted is a contribution in a private qualified pension fund. That is what I can say.
So another question, I need some clarification on long-term contract. Do we exclude non-allowable expenses in calculating percentage of completion?
Yeah, when we are dealing with longer-term contracts, when we are computing the percentage of completion, we consider all the expenses. The non-allowable expense are only considered when you are computing a tax. But for the purpose of computing the percentage of completion, we consider all the expenses incurred up to that particular point or up to the end of the year. So that is how we treat longer term contracts. Do you have another question?
Adam?
Yes.
Anyone? Janet?
Yes, I have a question.
Yes.
On employment income.
Yes.
When they have given you the amount of house benefit, let's say ABC company pays a certain amount for housing benefit for his employee. How do we treat that?
When you are looking at the benefits, if a benefit is in cash and it is paid to the employer, that one is an allowance. You consider that. But if the benefit is paid to the landlord, still it's going to be an allowance. As long as the employer is paying money, we take it as if that money is paid to the employee to rent. So you consider it as a housing allowance. The only way you calculate the 20% benefit is when the employer gives you a house. If an employer has given a house, that's when you calculate a 20% benefit. I hope you have got it, Janet.
Yes, I've got it.
Yes.
So we have also 3 questions from Galaxy. Question 1, income tax is computed monthly or annual? The
Income
second
tax.
one, the second one, under registration for VAT, you say each quarter is independent. How these affect the registration based on turnover? The last question, clarify more on pre-registration and the post-registration for VAT.
If I'm starting with the first question, income is calculated for monthly or for annual. If you are dealing with employment, the taxable period for employment varies because the pay as you earn system allows calculation monthly and annual. You have annual rate, you have monthly rate. So when you are calculating for employment income, it can be monthly, it can be annual. But for other business, for business profit, That one automatically it is annual. It's not monthly. Now you wanted also more clarification on VAT registration. I said on VAT registration, each quarter is independent. If quarter one, each quarter is 3 months. So if you start from January, February, March, and you have not achieved the target of 5 million, the next quarter will not start from February, March, and April. No. The next quarter is going to start from April, May, June. Then you look at your turnover. If you have not reached the target, then the third quarter will start from July, August, September. So each quarter is considered independent. There is no overlap. There is no overlap in the quarters. So the last question was to clarify more on pre-VAT registration and on post-sales adjustment. I said the pre-input VAT registration, input VAT or pre-VAT input VAT registration, you purchase goods and then you register after the goods have been purchased. So if you had purchased goods, then you register, you are allowed to claim for the input VAT on the goods that you had purchased. And I said there are conditions that must be fulfilled for that part. Condition number one, I said the goods are still available in the store. You have not yet sold them. Condition number two, you have got the invoices for the goods. Condition number three, the goods were purchased for the purpose of the business. And the condition number four, I said, the goods were purchased in a period of 4 years. If it is a service, we consider 6 months. So that is the pre-VAT registration. Then another important part I've talked about is the post-sale adjustments. And in the post-sale adjustment, I mentioned 4 important items: the discount, the bad debt, debit note, and the credit note. For discount, I said, you must first adjust a discount before calculating a VAT. If a taxpayer has offered a discount, before calculating VAT, you have to first adjust for that discount. You calculate the VAT on the net figure of a discount. Then on bad debt, I said a bad debt that fulfills the condition is also allowed to be adjusted. And I gave the condition for bad debt. It was written off. It was included in the previous sales. You have taken steps to recover and you have failed. So in those circumstances, you are allowed to adjust for a VAT, a bad debt in your VAT. And I said there are 2 ways under which you can adjust. You can reduce your VAT from the bad debt from your output, or you can add it to your input. Either way, you are going to get the same answer. So those are the 3 questions I think Galax has asked. I don't know if you still have another question.
So we have another 2 more questions. Could you kindly give us keynote on loss carried forward?
Yes. A loss carried forward. If a business makes a loss, the loss can be carried forward for the next 5 years, removing the first loss, or you deduct the first loss first. That is a loss. You deduct the loss from the profit before computing tax. Before you compute tax, you first adjust for the loss. Now, if there has been a change in the shares or this change in the share capital, and that change is 25 and above, a loss cannot be carried forward. So you can only, if there has been a change in the share capital of the company, the change in the capital of the company, and that change is 25 and above, you cannot carry forward the loss. But if there is no change, you can be able to carry forward your loss, and the loss is subtracted from the profit before tax. So that is what I can say on that point. Any other question?
Question from Champion. What did Rwanda tax law stipulate on taxing expatriate employee in Rwanda?
The tax on expatriate on employee in Rwanda are taxed like any other employee. They pay the same tax as any other employee. They are going to be in the pay as you earn system, like any employee, unless he's not a resident. If he's not a resident, if he's a non-resident, you withhold 15%. Maybe he has come for 5 days, is going. That is going to be 15%. But if he's here on a contract basis, then that one is like any other employee. Is it okay, friends? Any other question? Hello, Strato.
Yes, Daniel.
Do you have any other question?
There is another question on benefit in kind. When computing 20% for house allowance and 10% for motor vehicle, are there anything to be considered in addition to the salary communication and overtime allowance?
What we look at is the total cash benefits. What are the total cash benefits? We only exclude the benefit in kinds. So we consider all the total cash benefits an employee is getting, and then calculate the motor vehicle and the house allowance on total cash benefits. So that is how we deal with that.
So anyone remain with question? No question? Daniel.
Yes, please.
I hope everyone this panel has satisfied.
Thank you very much.
So thank you very much, Daniel, for good presentation.
Yes.
This is with help all participants on this portal. So after this presentation, you can give me this presentation and then share to all participants together with video for this session. So, and I hope this will help a lot for better preparation for exam. Thank you so much, Daniel, and thank you so much, every participant for this event.
Thank you very much, Strato. Okay, good night. I'm going to send you.
Okay, thank you.